All right, good afternoon. I appreciate you guys joining me on this webinar today. We're going to be discussing the CARES Act for individuals. My name is Deaton Smith. I'm a certified financial planner here in Hickory, North Carolina, and I'm the president of Thayer Financial, a fee-only registered investment advisor. We're going to be discussing CARES Act. You've probably heard about it. It's the big stimulus bill that has been passed by Congress and President Trump. And this is, it pertains a lot of important information that pertains to just individuals. I've got a separate webinar that I'll be launching that is speaking directly to the businesses and business owners about some of those programs on that. But this is really geared towards individuals, employees that could be affected by this COVID-19 crisis. All right, so the agenda we're going to be talking about today is going over recovery rebates, unemployment benefits, COVID-19 related retirement plan distributions, qualified plan loans, required minimum distributions, qualified charitable contributions, student loans, and individual health care changes. All right, so what everybody's probably very familiar with are the recovery rebates. This is the free check everybody's going to be receiving in the country. And so wanted to speak about this. So it's called a recovery rebate. All right. And so individuals they file their taxes as single, they are going to be receiving up to $1,200. All right. Couples that are filing married, they're going to receive up to $2,400. And then each child 16 years or younger is going to qualify for an additional $500 recovery rebate. And I keep saying up to because there's some phase out limits based off of your annual gross income that could reduce that amount. All right. And so your income and how the government is going to determine whether or not you get a recovery rebate is based off of your 2018 or your 2019 tax filing. All right, it's going to be whichever one is the latest that you filed. So if you put off filing your 2019 taxes, they're going to look at your 2018 tax returns. If you filed your 2019, those are going to be the numbers that they look at when determining your recovery rebate. All right, and so if you're single, your threshold, the AGI, adjustable gross income is $75,000. If you're married filing jointly, that number goes up to $150,000. And if you are the head of household, that's how you file your taxes, that number is $112,500. All right. And so this rebate threshold phase out limits, so they reduce your rebate amount by $5 for every $100 over that adjustable gross income threshold. All right. And so I'm going to give some examples of this. All right. So John and Jane, they've got 3 kids under the age of 17. Their 2019 adjustable gross income was reported at $185,000. Because of the phase out, that's the $5 reduction. Now they're going to receive a recovery rebate of $2,150. All right. This rebate, so what you may be saying is, well, hey, that was 2019. We're in 2020. John and Jane may have just lost their jobs or been furloughed or something along that lines. We're going to be well under that $150,000 adjustable gross income mark. Well, what's going to end up happening is when John and Jane go and file their 2020 tax returns, which is 12 months from now, right? It's going to be trued up. So if their reported AGI is less than the $150,000 for 2020, they're going to receive a tax credit for the remaining $1,750. All right. Also, one important note is that, if John and Jane's income for some reason skyrockets in 2020 and they get past whatever amount that they would even get any recovery rebate. There are no clawback provisions, so they're not going to have to pay any of that money back. All right. And so the next example on the right-hand side is that Bill and Sarah, they got one kid under the age of 17. They haven't filed their 2019 taxes yet. So that means that the government's going to be looking at the 2018 adjusted gross income. And that was the AGI was 135. Because of this, they're going to receive a $2,900 recovery rebate. And so, just like that previous example, if Bill and Sarah's income skyrockets in 2020, because let's say they sell toilet paper or something like that, or hand sanitizer, if their income goes exceptionally high, they're not going to owe any of that recovery rebate back to the government, all right? Or like when they file up their taxes. So that's a great, great thing happening here. I will say, this is not perfect. Realize that this has a lot of gaps because the folks like John and Jane, if they lost their income this year, having $1,750 immediately is going to be a lot more beneficial because they lost their jobs than it is getting it in a tax return a year from now. But unfortunately, the bill's not perfect, but that is how the law was written. All right. Next up is the unemployment benefits. And so there's a tremendous amount to the unemployment benefits, and this is a huge part of this stimulus bill. All right, so some of the big changes on this is that benefits are going to start immediately. All right, so traditionally unemployment benefits, the unemployed individual has to wait at least 1 week to file for unemployment. That 1 week elimination period is now gone. So as soon as a worker gets furloughed, laid off because of things going on, they are going to now qualify for unemployment benefits immediately. All right. The federal government is also going to increase the state's unemployment amount by an additional $600 per week. And this starts on April 4th and will go through July 31st. So for 4 months. All right. I know North Carolina, I'm a North Carolina resident. I know North Carolina dollar amounts and unemployment laws. So North Carolina pays $350 per week in unemployment. So a North Carolina resident who files for unemployment is going to receive $950 per week. All right. Some other additional things is that unemployment compensation is going to extend an additional 13 weeks past its normal amount, I believe, of 26 weeks. So a whole nother quarter. And one of the big changes here, and this is great for all the folks that are self-employed out here, traditionally, self-employed individuals do not qualify for unemployment benefits. However, part of this CARES Act was that they established the Pandemic Unemployment Assistance Fund, which means that self-employed individuals who are negatively affected from this pandemic, from the government shutdowns and businesses closing down, they are now going to be able to qualify for unemployment benefits. So make sure that you understand this. If you're self-employed, give me a call. We can talk about this as well. All right. Moving on to some additional things here. So COVID-19 related distributions. All right. So individuals who have been impacted by COVID-19 have the ability to distribute up to $100,000 from their qualified investment accounts. So we're talking IRAs, 401k, 403bs in the year 2020. All right. Now, the government has exempted, they've gotten rid of the 10% penalty. All right. So traditionally, if you took money out before you were 59 and a half, they would penalize you, the IRS would, 10%, basically to keep you from accessing this money before retirement. That 10% penalty has been exempted, so you are no longer required to pay that penalty. Another part of it is that there was a mandatory 20% withholding requirement. If you took money out of your qualified accounts, they would withhold 20% just to make sure the IRS is getting paid on this. That is now no longer a mandatory thing. If you pull out the full 100,000, you're going to get the $100,000. Okay, you're not going to get the 80,000. Also, this money that you take out, you will be eligible to repay it over the next 3 years. So from the moment you decide to take it, you've got 3 years to put up to that total amount that you took out through a distribution back into your retirement plan, so that you can use it in future years for retirement planning purposes. All right. And the last was that they did not get rid of the taxes, right? So they got rid of the penalty. So this is, if you take money out of your retirement accounts, they will still be taxed, right? So depending on what tax bracket you are whatsoever, right, you are still going to be required to pay taxes on it, but they've given you the option. So you can either pay it all in 2020, or you're going to have the ability to spread it out over the next 3 years. So you would only pay a third in 2020, a third in 2021, and then a third in 2022. All right. So it's an either or. You can't pay it over 2 years or whatever it is. It's you either pay it all in 2020, or you have to pay it over the 3-year period of 2020 through 2022. Okay. Going on to 401ks and 403b loans, right? So they have increased the amount that you can take out in the form of a loan from $50,000 to $100,000. And they've also increased the amount that you are allowed to borrow as up to 100% of your vested balance amount. And normally that was 50%, right? So it's either you can take out 100% of the vested balance in your 401k or 403b, or $100,000, whichever is the lesser of the two. All right. They've also put in a provision that you can delay repaying that loan for up to 1 year. So this is all about being able to create additional cash flow in this trying time for folks, right? And I think these last couple laws changes have shown that. All right. Another big change here is for required minimum distributions, all right, also known as RMDs. So normally it's after 70 and a half, now 72 with the whole new Secure Act changes. Individuals who are over those ages have to take out a certain amount of money from their IRAs or 401ks, right? So basically the CARES Act just says, hey, 2020, you don't have to do any RMDs anymore. So it's like 2020 does not exist. And so any RMD, and if you were somehow, you jumped the gun at the beginning of the year, 2020, back in January, you just like getting your RMDs out of the way. Well, you actually have the ability to put that money back in. You can return it and put it back into your retirement account. Now, I don't want to get into the mechanics of actually doing that, but if you have interest in that, and if you've already taken it, give me a call. I'll be happy to discuss it more with you. But you do have the ability to return it back into your IRA or 401k. All right. So the other thing is qualified charitable contributions. All right. So even if you are an individual or a family and you don't itemize your taxes, you just take the standardized $24,400 or standard deduction on your tax forms. They have now incorporated a new $300 above the line deduction that's going to lower your 2020 income, even, despite not itemizing your taxes. Okay. In aggregate as a whole for the country, this is a lot of money that they're giving back, but $300 for the person in the highest tax bracket is only $111 of tax savings. So not a huge amount, but still it is something that is not to be overlooked. Okay. And so for the folks that are listening and watching this right now, if you're a student loan borrower, if you have federal student loans, your payments have been suspended until September 30th of 2020. All right. So this is federal student loans. This is not if you have a private loan or anything like that. You need to check with your bank on that. So don't just stop paying. But if it is a federal student loan, you don't have to make any more payments until September 30th. However, they still are accepting voluntary payments. And so during this time, between now and September 30th, these federal student loans are not accruing any interest. So it's 0% interest. You're not penalized or not harmed or anything like that. It may still make sense to continue making payments if you've got the cash flow, because you're going to be paying down that loan even faster since it is 0% interest. All right. Now, if you are working towards a loan forgiveness program, all right, it might not make much sense to continue making these payments, because this time period from April 1st right now, or March 30th to September 30th, is going to count towards any loan forgiveness programs. All right. So if you make a payment during this time, you're going to be paying down a loan that's going to be forgiven anyway. So it might make a lot more sense to just hold on to that money for you. Okay. Also, all involuntary debt collections are also going to be suspended. That's for student loans, through September 30th. All right. And so the last big change here was regarding individual healthcare changes. Over the counter, before, over the counter medications did not qualify for HSA or FSA, that's health savings accounts or flex spending accounts. However, they have now changed it, which is fantastic, especially given the health crisis we're in right now. So you can use the monies in your HSA or FSA to pay for over-the-counter medications. Now, if you are listening here and you are on Medicare, or you've got loved ones that are on Medicare, Medicare recipients are going to receive their COVID-19 vaccines at no cost. That's when they're available. Unfortunately, they are not available right now. Let's hope that's soon. As well as if you are a Part D recipient for Medicare, that is the prescription plan, these individuals now have the ability to request up to a 90-day supply of their prescriptions. And since most of these folks on Medicare are the at-risk population for COVID-19, getting them a 3-month supply is very beneficial, and just keeping them out of the general public, keeping them safe at home, socially distanced. And so whether you're this person or you've got parents or grandparents or loved ones that do qualify for this, let them know that they've got the ability to get that 90-day supply of prescriptions. They don't have to go back on a monthly basis. Just helps them eliminate a couple chances of them catching this bug. All right. I know I went fast on this, but if you want to speak more to me on this, please feel free to schedule an initial consultation. You can go to my website, thairfinancial.com/schedule-a meeting. All right. And so the button will also be on the website there. But would love to talk to you guys if you need any planning assistance regarding this. Again, my name is Deaton Smith, and talk to you soon. Thanks for joining.